Hi everyone, Chris here over at Williams & Co Trading. Just coming to you this Sunday the 16th of December, just for a little preview on the week ahead. So taking a quick look at the Euro here, the daily chart on the left, we're looking for a flat correction. We're looking for a wave B, this red wave B here, to make a new low before we bounce up for a more significant correction. So as you can see, we had 5 waves down. That brought us to August. We then seem to be trading. We are still bearish here. We are still trading lower. It just looks as if we had 5 completed. So this to me is probably part of some kind of flat correction. And a flat correction is just one that comes back to retest these lows, which we're currently doing in wave B. Sometimes we can come lower. That would be an expanded flat correction. So we'll come lower and then look for a nice bullish turn, which could be very significant and take us way back up to 118. We've been trying multiple times, over the last, couple of months actually, to take long positions in the euro. We've caught some pips here and there, but it's been tricky given that the price action's so bearish recently. But we've always been targeting 116 and 118. I think we can get up there. We've got a 618 fib right the way up at 121. I don't think it's highly likely we'll get there, but it's a possibility. But right now on the short term, I'm still expecting this to break down. We've been looking at a triangle, which you can see on the right hand side of the 4-hour chart. We had it drawn slightly differently last week. We had it drawn a little bit like this, so it looks like it potentially broke down. However, what I don't like about this is that we've got 3 waves. So if this triangle was completed up here, we've only had an ABC down, which of course I want to look for an impulse wave, which is 5. If we overlap this area here, which we're very close to doing, then in my opinion this triangle needs to be drawn this way, and that's just because there's an Elliott wave rule that in a 5-wave impulse, wave 4 doesn't overlap wave 1. So let me just demonstrate what that means. So if we finish the triangle up here at this point, now means that we want to get a 5-wave impulse to the downside. So if I start labeling these significant waves that we can see here, 1, 2, this would be a 3, could then get a 4 and a 5, but wave 4 should never overlap wave 1. So that means if price action comes above this, then it's invalid and it's not a 5-wave impulse. So at the moment I'm still aside on the euro. I want to see something a bit clearer. What we could get is another maybe retest up at these levels here before we break down, but I am bearish. I'm just looking for a little bit more confirmation than what we've had so far. Ideally 5 waves to the downside that look very strong, and then we can look for a 3-wave bounce for an ABC correction before we take maybe a short position. If we do break down, we can target 111, maybe 110.40. We've got some fib levels down there in that area. Okay, so I just want to take a look. I'm not going to take a look at the pound just because it's a bit of a mess, to be honest. We had a triangle that we looked at last week. We've now broken down. RSI is divergent here. I'm not keen on taking a short position. The setup just isn't very clean, and of course I'm not going to try and pick a bottom, because as the saying goes, the only thing you get picking bottoms is smelly fingers. That's one I always remember. So yeah, this isn't great. If we get a strong 5-wave up, it could even still be a flat correction, and this triangle is invalid, meaning that we've had an ABC back down to the lows. So though it's a little bit messy, this could be a flat with an ABC coming back to new lows, and then a 5-wave impulse. It could follow a similar pattern to the euro and have that 5-wave impulse to the upside. But I believe that'll probably all come together. When we see some serious dollar weakness in the market, because in my opinion we're going to get a little bit more strength for a short while, whether it's just over the Christmas period, very briefly, or maybe it extends, early next year. Um, but I can see us having some dollar strength just for a little while longer. The pound is just not a setup for me, so I'm aside on that. Don't really have any interest in trading it. The Aussie is a tricky one because we were following potentially a bullish turn, which we'd seen this rally. The problem with that is that this could have been 3 waves as well. If we were to take this kind of sideways chop here as a wave B, quite corrective, and then obviously we've got strong impulse higher for wave C. So again, that could just be an ABC higher, and now we go lower. I was last week looking for short positions. Ideally, I would like to have seen come up to the 618 or at least the 50%. We didn't get any of those. Looks like we've broken down already. But still, I'm not looking for short positions at really shallow retracements. This was really too shallow for us to take a position on. If we were to take a short, even if we'd caught that high, we'd have had to have stops right up here near the highs, and that's just, that's too wide for me, and the risk reward wouldn't have been very good. What we can wait for is, again, a potential bounce like we're looking for in some of the other pairs. Whether it's going to come soon, I'm unsure, but this isn't really tradable for me either. Had this come up to a 50% 618, it would have been perfect. Unfortunately, it's broken down early. I'm not really willing to take a position on a pullback here, purely because this correction we saw, let's go to the hourly, this correction we saw, what we were initially looking at was this to be one wave, this to be a second wave, which I would have liked to have been deeper. Alternatively, it could be something a bit more complex. Maybe this was the end of wave 3, that was wave 4, and this was 5, right? Which means now we'll get a big ABC higher, get those 3 waves that we're after to at least a decent fib level, such as the 50 or 618. Okay, so again, I'm aside on this one as well. At least until we can see, a decent bounce up here, and then we can look to get short. So at the moment, nothing on that one. Kiwi, looks like we had a strong 5-wave impulse there. You can see on the daily. So we're looking for a 3-wave pullback. Before we look for long positions. We want the 50 or the 618, so we're still waiting on this one. This to me looks like 1, 2. This would probably be a 3rd wave here. 4 and 5. Okay. Once we get 5 down, that would probably be wave A. Okay, because wave A has 5 smaller waves inside it, so this would be at least the beginning of a correction. Get an A maybe there. B, C. This could always be shallower. As I've said before, if wave A hits a 38%, so let me just put that in. If wave A hits a 38%, which have also got wave 4 support there, we can bounce into wave B, and then wave C tends to hit the 618. That would be perfect. We can get a 3 wave to the 618. Find support initially here at the 38%. And then get our C wave to a 618. That would of course give us the best risk reward. So waiting on the Kiwi. Ideally, we want to be buying, but it's just a matter of waiting for a decent setup. Dollar Canadian, again, we say it every week. Is that this rally is just, I don't know how it's still going, to be honest. It's so choppy. You can see all the spikes we've had. It's really not clean. This thing just needs to buckle. The only thing I can see doing it is probably a bounce in oil maybe, or obviously severe dollar weakness, which, as I've said, may not come yet. We might be waiting until next year for some serious dollar weakness. So again, we're just like within some kind of channel, maybe. That looks fairly parallel to me. And we just need to wait for a break. So if I copy this, so we want to break off the channel, and then you can play short positions against the highs. It's just a waiting game at the moment. Coming into this holiday season now, there's really not going to be much on the table for us, which is fine. It means you can go out, you don't have to worry about checking your trades, updating them, and things like that. You can go and spend time with your family. It's that time of year, so just be prepared for it to be quite quiet. Okay, the Swissy. We have a long position in Swissy. I'm going to go down to a 1 hour chart. So I think we got in somewhere in this little choppy correction here, didn't we? Let me just measure this. We're going to move stops in this because we've had one wave up. That could potentially be the end of it, or here. One of those is the high, but we'll take that as there's the first wave. We've got an equal measured move up here. Okay, so I've took the length of this first bullish move and I've projected it from the end of the correction. We've got 100% up there. A 618 is a popular one as well, which we spiked above. Alternatively, I could have the wrong high, and this could be the high. Maybe this spike was a flat correction. We pretty much tagged 100%. Okay, so in my opinion, there's a chance that this could be a reversal zone if it's just an ABC higher. It could always not be. This could come and correct a little bit lower and just keep launching higher and higher. If the euro dollar breaks down, dollar Swiss could rip. So it's just a case of tightening our stops a little bit, but still giving it enough room so that if this is some kind of initial wave, that we can get a 618 pullback on this and just tear higher from there. So stops will probably come to this low. I may chance it, put them a little bit higher, depending on where our entry was. Ideally, I would rather take a small amount of profit if we can. So I'll take a look at where our entry was, and I'll update this. I'll do it tonight and get an email out as well. Dollar yen. We had initially been bearish based on harmonic patterns, few wave counts that we had. Then changed it last week because it just began to look more and more like a triangle. The thing with triangles is that you're just best off sitting on your money and waiting. You just wait on a break. And it's got to be in 5 waves. There's no point trying to trade this. There's no point trying to guess what way it's going to go and committing to a bias. Triangles tend to happen in a wave 4 or a wave B. I've got this labelled as A because it was so sharp. I've then got the main part of the triangle is B, so it would be a triangle for wave B. Triangles have 5 legs, so that would be the first. I would say this is the second. We've possibly made a third. We could come a little higher, make a third. So we've got a 3, 4, 5. So we've still got some ways to go. This could draw out for a little bit longer. It's quite a big triangle, so if it really does chop around for a long time, the apex isn't going to come into play until next year. So if this really draws out, this could be the Christmas and New Year season, and then once we hit 2019, could maybe dump from there, or if we break higher, it could get up to, I don't know, I guess we could test these highs at 115. Sorry, 114.50. So this is another just boring, nasty triangle that we just need to just wait for. There's no point trying to get intraday price moves on this. because the trend, the trend is your friend. There's no point trying to trade sideways price action. It'll only harm your pocket. Euro pound. I was looking at a triangle. We had a potential breakout. Could have been a false breakout. So we'd tested this trend line and come back down. It's not a very clean setup. If we have a look at the weekly. The weekly was fairly clear. It's bullish. So we want some kind of, correction. That's a nasty weekly candle, by the way. So it could be a big rejection. We just have to see how this plays out. So this was from the 12th, which was Wednesday. So this was 2 days worth of price action that created this horrific spike on the weekly candle. So this could be bearish. Entirely depends on, like we just looked at, the euro potentially breaking down. And seeing what the pound does. If this is a flat correction, we can bounce, and that is going to take euro pound lower. Because on this weekly, we need a decent correction to happen. People want to get long, probably. You got people that are long-term traders that really just want to be long in this, and might be looking for entries at 83, 84. So we've got to get down there somehow. So for a structure to stay nice and clean and to be a good two-way market to trade, on both directions, we want to see a significant correction in this. So just hold tight on that one. For me, let me see what wave count I can get on this. Now I'd be tempted to say we've had 3 down for A, 3 up, which would be 1, 2, 3, and now we could get a C wave down. So this would be a flat correction, so that would be ABC, and we'd have another ABC up, which is probably this. And then obviously come down a lot lower now towards that 83 area to retest this low. Of course, I'm not massively convinced on what the pound is doing versus the dollar, so I'm going to be watching that, to be honest. If we can get 5 up against the dollar, given that the dollar's I'm expected to be fairly strong, then we could look at this for opportunities. But for now, it's just something I've just briefly looked at there. It's not on my radar to trade in the very near future, but would rather be bearish than bullish on this. Okay, I want to take a look at crude oil, because as we mentioned with the dollar Canadian, that thing really needs to come lower somehow. Longer term oil, as we've looked before, now could potentially be in a huge triangle range, which is fine, because it means that in the coming maybe 2 years we're going to be driving into the apex of a triangle, which is boom or bust, basically, which way we're going to go. There's obviously more room to the upside, sky's the limit, whereas you have a floor on the downside. If this breaks 30, you've only got room down to 0, right? If we break 55, you've got room up to, well, infinity, haven't you? So with this, again, if we're inside this triangle, it's not really that tradable. We'd initially been bullish. We thought that this ABC was actually a 5-wave move, and this was 1, 2, 3. We were going to get a wave 4 correction before higher. It's evidently not going to happen at this point. As you can see, oil does have these nasty drops, and then we kind of have this slow correction higher, then another nasty drop. This one was stronger than the last one, but unfortunately this monthly candle that we got was just awful. So this sideways stuff is I've got a triangle drawn on the 4-hour. It's definitely a triangle. Triangles tend to come prior to the terminal wave. So what I mean by that is we'll get one leg lower after the triangle, then it's likely it's going to bounce. So if we're watching dollar Canadian and we really want that thing to come down and break that channel, we need this to post a new low and then bounce from there in 5 waves, and then dollar Canadian might be a decent candidate for short positions. Reason being is oil is correlated because Canada is a large oil exporter, so if oil goes up, the Canadian dollar gains value, so that would mean dollar CAD comes lower. Okay, let's have a look at bonds. I've not had a look at bonds yet, so okay, so we're still correcting in bonds, which is why dollar yen's still going to be chopping around. Most of our yen trades have been based on the bond market, and they've worked out really well for us. So I'm going to continue to watch this pretty closely. If there's any opportunity for us to take a long bonds position, but in the forex market, so it would be a yen long, then of course that's what I've got my eye on. Okay, take a look at Bitcoin. Suppose we can just sit and laugh at this, can't we? I was expecting some kind of reaction, clearly, because I've had that drawn out. Just delete that. If this was an ending diagonal, then we're currently overthrowing a little bit. RSI is divergent down here. Could bounce. So could see some strength in Bitcoin. I wouldn't be trading it until we probably get above this trend line here. But I don't really have any interest in being long this. Not yet. So that's it from me. But that's it for the video for now. And I'll speak to you guys tomorrow. Cheers.